Welcome to the XFO Intelligence Podcast, the channel where we explore the strategies shaping the future of wealth for family offices and global enterprises. Today, we're exploring a profound shift in the world of high-value assets, summarized in a recent report, The Confluence of Capital and Culture. It's a strategic analysis of art investment for family offices with, a laser focus on Hong Kong. I'm your host, Julian, and joining me is Elena, a specialist in art market strategy. Elena, thank you so much for being here.
It's a pleasure, Julian.
Yeah.
This is a conversation that's really moving from the fringes to the absolute core of wealth management.
Absolutely.
The report's central argument is, it's compelling. Art is no longer just a passive collectible.
Okay, let's start right there. The report says art has evolved from a passive collectible to a dynamic, multifaceted strategic asset class. For our listeners, the principals at family offices, the wealth managers, what does that paradigm shift what does it look like in practice?
It's a fundamental change in mindset.
Okay.
The old transactional approach was, I like this painting, I will buy it. The new systems-oriented approach is, how can this work of art actively serve our family's comprehensive goals? It means the CFO, the head of philanthropy, and the next generation, they're all involved in the strategy surrounding the collection.
Wow.
The art is no longer just on the balance sheet, it's working for the balance sheet and the family's legacy.
So it becomes an active part of the family's enterprise.
Exactly.
And the report argues that Hong Kong is the global epicenter for this. Why is it more than just another art hub?
The report just nails this with what it calls the Hong Kong advantage.
Okay.
It's a convergence of four powerful forces. First, you have the financial architecture.
Right.
Think about it. A zero-tax regime on art, free movement of capital, and a world-class private banking sector that is getting so much more sophisticated in art-backed lending.
Yeah.
The efficiency is just unmatched.
And from a strategic standpoint, that financial plumbing is it's crucial.
It is.
And what are the other pillars?
So the second is its geopolitical positioning.
It
is and remains the premier gateway between mainland China's, their vast and growing collector base, and the international art market.
Right.
It offers unparalleled access and liquidity. Then third is the cultural infrastructure. With the West Kowloon Cultural District anchored by the magnificent M+ and Hong Kong Palace museums, the city has truly cemented its status as a global cultural capital.
Wow.
This provides these world-class venues for validation and, of course, for philanthropy.
So it creates a halo effect for collections that are housed or shown there.
Precisely.
Yeah.
And that leads right to the fourth pillar, the cluster effect.
Okay.
You have the world's top auction houses, elite galleries, specialist advisors, and these ultra-secure storage facilities all concentrated in one place.
Right.
This creates a powerful network that reduces transaction costs and really builds trust in the market. It's a finely tuned ecosystem.
An ecosystem that allows art to be treated in a much more complex way.
Yes.
So let's deconstruct how family offices should view the asset itself.
Okay.
The report outlines four value drivers. The first is the financial engine, art as a store of value, a non-correlated asset. That's familiar territory. But the second, the liquidity tool, that feels like the real game changer.
Absolutely.
Yeah.
Yeah, this is where art becomes a dynamic financial instrument. Through art-secured lending, a family office can collateralize its collection to unlock significant liquidity.
Wow.
And you can then deploy that capital into other investments or business needs, all without selling the artwork and triggering a capital gains tax event.
Right.
From a CFO's perspective, Julian, how powerful is that? The ability to unlock liquidity from a dormant asset.
It's incredibly powerful.
Yeah.
You're turning a static object on a wall into a flexible line of credit. It fundamentally changes its role in the portfolio.
Exactly.
And what are the other drivers?
So the third is social capital generator.
Okay.
A well-curated collection is a key. It unlocks doors. It grants access to exclusive networks, builds family prestige, and can lead directly to off-market investment opportunities.
Right.
And fourth, and arguably the most enduring, is legacy vehicle.
Okay.
Art is a language.
Yeah.
It's a way to express a family's values, to educate the next generation about culture and history, and to create a philanthropic impact that will resonate for centuries.
This provides a perfect transition to the opportunity matrix in the report, which is sort of a practical roadmap.
Yes.
For a family office wanting to move from passive collecting to active strategy, what's the first step? The report suggests art-secured lending as a Tier 1 opportunity.
That's the most direct way to enhance capital efficiency.
Right.
But another fascinating Tier 1 strategy is syndicated acquisition.
Ooh.
This is where a small, trusted consortium of family offices pools its capital and expertise to acquire a monumental work or even an artist's estate.
Wow.
It mitigates risk and allows access to a level of the market that might just be unattainable for a single buyer.
That's a very sophisticated, kind of a private equity style approach to art.
It is.
And so on the other side of the table, how should art businesses evolve to meet this new demand?
Well, they must become solution providers, not just dealers.
Okay.
The report highlights the need for a faux art concierge service, a single point of contact that seamlessly blends art expertise with financial and legal acumen. They would manage everything from acquisition and logistics to insurance, curation, and eventual divestment.
So everything.
They become an indispensable partner in the family's integrated strategy.
Looking to the horizon, the report projects several key trends. Let's touch on two, technology and the intergenerational transfer.
Okay.
How is tech reshaping collection management?
Oh, technology is bringing unprecedented transparency and efficiency. AI is being developed for portfolio tracking, predictive valuation, identifying market trends.
Right.
And more fundamentally, blockchain is set to become the standard for provenance. An immutable digital record of an artwork's ownership and exhibition history, that will be the new seal of authenticity. It will dramatically reduce risk.
And as wealth passes to new hands,
The intergenerational transfer is critical.
right.
As millennial and Gen Z heirs take the helm, they bring different values. They demand transparency, they are digitally native, and they place a much stronger emphasis on impact and storytelling.
Interesting.
This will accelerate the shift towards digital art forms like NFTs and a greater focus on strategic, impact-driven philanthropy.
So really, the unifying theme of the report and our conversation is this whole concept of the integrated mandate.
Yes.
The time for seeing art as a siloed, decorative afterthought is definitively over.
Exactly.
Yeah.
The most forward-thinking family offices will have their CFO leveraging the collection for liquidity, their head of impact using it to build a cultural legacy, and the next generation trained as educated, engaged stewards.
Wow.
A powerful and holistic vision for the future.
Elena, this has been an incredibly insightful discussion. Thank you for sharing your expertise.
It was my pleasure, Julian.
The report leaves us with a clear call to action to move beyond transaction and toward integration. And that leads to a final thought for our audience to consider. Now, here's a question we'd like you to think about. If you were to treat your family's art collection not as a set of objects, but as a dynamic company with its own balance sheet, brand, and social mission, what would be the first strategic move you would make to unlock its hidden value?